Okay, I think we are ready to resume our session. Oops, careful. I'd like to invite the panelists to please take a seat. We will resume now with the session on sector coupling and LNG, focusing on LNG.
Good.
Will you start?
I'm already.
Okay.
So if you want to take a seat, please.
Please take a seat.
Okay, the next 15 minutes we will focus on a bit more a global picture, and I'll give you some insights into LNG, global gas as I like to call it. And I want to be a bit cynical and interact a bit, and I want to tell you how it broke the gas market this year and what it really means for Europe, and what I mean by broke. And it really busted it up and broke it up. So I think you'll find it quite interesting and challenging. At the end we'll have some Q&A if you have any questions, but I'll go straight into it. And the first interactive question, disclaimer of course, is I want to talk about the broken gas market, how it broke, and most importantly, what's next for Europe, in my view. These are my personal views. I've traded LNG for the last 20 years. I've traded gas and power for the last 15 years. So I've run a big LNG portfolio and I'm quite heavily involved. First question I have for everybody, and I know this is a bit hypothetical, but I love these questions as a trader. If you've taken 1 BCM of gas, it's a big amount, yes, but for utilities that are in this room, it's not a huge amount. And I would have sold that gas from June through October this year, 2019, on our lovely hub TTF, here in the most liquid hub there is. But I would have sold it 5 months ahead, meaning for June I would have sold it in January, for July I would have sold it in February, for August I would have sold it in March. So 5 months on the forward we call it. Yeah, good prices, I'll sell it each month up to 1 BCM of total volume. And then I would have waited and bought that gas back on the prompt, on the day ahead, when it was average day ahead. So a very simple trade within year, January forward selling, February forward selling every month, and then buying it back. 1 BCM is a big amount, it's not small, but it's the average size of utility portfolio. How much money do you think I would have made? Forward selling 5 months and buying 5 months later. Not a big deal, not super risky. It's actually quite a normal strategy. What is the guess? Are we talking 10 million euros? 100 million euros? What shocked me when I calculated the numbers, very simple, and I'll show you how I got to this. You would have made 500 million euros. That shocked me, and this is when I mentioned it, that the gas market is broken. How can a gas market think the gas is worth this, and then 5 months later say, no, it's worth 500 million euros less? Just does not make sense. This is why I believe there's a real disconnect between the markets and gas, and I'm going to explain to you why, in my opinion, that is, and what's the outlook. So why did this happen? How do we get to $500 million drop for 1 BCM? Am I talking portfolios of 5, 10 BCM? You're talking billions and billions wiped off the gas price in a matter of months. So here's how we started out. This is very empirical data. This is the TTF price in January, beginning of the year. Okay, it's the peak. I'm being a bit cheeky here. This is the height it reached in January. So in January, you could have sold your gas at 21 euros on the TTF. Very easy, click, couple clicks, you could have traded it. When it came to June, what happened? 10 euros, half. It ended up half. So the forward market thought June gas is worth 20 euros. It was 10. Okay, blimp, oversupply. We know why, and we could talk about the LNG that came flooding into the market. Market must have gotten smarter. So July, it traded at 18 euros. Come February, it traded 18 euros. By sure now the market has gotten a little bit smarter. So what happened in July on the fundamental the head basis? Boom, 10 euros. Again, we dropped back to 10. So for some reason the market thought the gas in the summer is worth 18 to 20 euros. But then we came to summer and said, no, actually it's only worth half that. So this is what I mean by the gas market is broken. There's something really fundamental. This shouldn't happen in a gas market in a matter of 5 months. Over years, yes. So we continued on. August 17, okay, it's come off a bit. It's August, it's hot. Nobody's using gas for heating. Boom, 10 euros. And then what's really shocking to me is by September, people should have realized. Anybody should have thought, well, this is happening September, surely enough, shouldn't be so high. But September, 5 months earlier, so we're talking now March, April, was trading at 17 euros on the forward and also ended up at 9. We actually had prices of 8 euros. Huge, huge drop. And then you come to the last month, just 3 weeks ago, and you would have thought, by now, traders got this. And people have realized, this is not right. Forward markets shouldn't be overvalued. Sure enough, October in June, April, May, June was trading at 18.6 euros at the peak. Okay, it's getting colder. And I thought, now it's winter, October, heating season starts. You know what October ended up at? 10 euros. So this is the shock when I mean the market is broken. There's a complete disconnect between what gas market prices are in the future, just a couple months out, and then when it comes to fundamentals on the day, oversupply. There's a huge imbalance, and I'm going to talk about why this imbalance is there, and will it continue, most importantly. But the very fact of this is that the market got it totally wrong. Forward optimism by all the traders, the producers, the LNG players, the importers, all said, prices should be there. And then the realities was prices were half a price down. The fundamentals between the forward market and the spot market is completely broken and disconnected. And there's a real weird sense of, is this going to continue? And this is what I think is fascinating, that market still hasn't learned. You're still trading at these high levels, and still in the prompt market, we're still ending up with these very, very low markets. So why is it? Why is it so broken? How can this happen that the gas market in Europe has been so disconnected on the forwards and the day ahead and letting people win or lose €500 million very easily? That's just not normal. So here's the very simple answer. This is all the LNG projects that came online this year. It's huge. There's a number down here, it says 58 BCM globally. New LNG, on top of what's already there. And they all started this year, sooner or later, some of them just come online recently. And I couldn't believe that markets would spew all this amount of gas onto the market. But then I thought, okay, how come this could happen? Why would the market allow so much volume to come online when there isn't really a demand for it? And the reason was, when you look at the FID, the financial investment decision, when was the decision made to produce all this gas? And the fact is, this decision was made 3 to 8 years ago. So the results of today's low spot gas price is not a result of what we're doing today. This was a decision made as early as 2011 for some of them. Some of them 2015, but all these way back, smart people like us thought this is going to be a big need, and we're going to need to produce more LNG, and the world's going to need it. Fact, world didn't need it, and the result we see in our gas price. Markets work, and the gas price have slumped on the fundamentals. Why did they decide to build all this LNG globally if the market didn't need it? And I really thought back, what can we learn from this? What is it? So I went back, and I went back to 2015. And in 2015, this was published by the International Gas Union, independent body. On the left, you see the demand. On the right is the supply, and there's a nice little gap. So if I'm sitting in 2015 and listening to the International Gas Union, there's a gap. I'm going to have to fill that gap. And how I'm going to fill it, very clearly in 2019, with more LNG. This is global, fantastic. All the papers say the same, let's go produce some LNG. Even worse, so this is a chart, again, 2015, from the IHS, International Gas Union. The two red lines show massive gap. Starting in 2019, it's only going to get worse. So if you're sitting in 2015, you're thinking, great, let's build more LNG plants in Australia, in the US, wherever it is. We're going to need it. We got it completely wrong. There was no need in 2019 at least, and certainly my view would be going forward, there's no need in 2020 for this. Okay, 2023, 2024, crystal ball, who knows? But clearly they got something wrong. So what was the other reasons why people built so much LNG and pushed the market price down? And there's this famous story that I've worked with a lot of LNG majors and energy majors, and they all didn't believe it. I mean, this is a quote from the CEO of Shell, Ben van Beurden, just a year ago. No way, there is no LNG glut. Of course he would say that. He's built a giant prelude floating liquefaction plant costing billions and billions. He's got more LNG coming out. So there's a vested interest by the industry to keep investing more in LNG. Believe it or not, LNG projects are fun projects to do. Engineers love it. They consume billions. They get good returns for the project owners because people contract them. But the reality is, markets didn't really need it. This is what's really shocking. But even a year ago, all the big majors said, no glut, no glut. And in fact, they said, see, you told us there would be a glut, and there wasn't a glut in 2018, because in 2018, last year, we heard a lot of LNG, but lovely China absorbed all of it. And so said, we told you so, there is no glut. China needs all this gas. And people told me a year ago, look, don't worry about it. China will be there, China needs it, China needs to decoal, China needs to do this. Well, China did take a lot of gas in 2018. I sold quite a few cargoes to them, was involved with it. Reality is, China got smarter and said, well, this didn't go well for us. We had to pay a lot for that LNG. Ain't gonna do that again. And they immediately flew to Turkmenistan, Kazakhstan, to Russia, and made sure they got new pipeline supplies to make sure they're not reliable on LNG alone anymore. And this is the first year now where we're gonna have a Russian pipe bringing more gas into China. We're gonna have more Turkmenistan supplies, Kazakhstan supplies. So China, like all countries, has gotten smarter and says, yeah, we need some LNG, but we're not going to do this mistake again and absorb all that LNG in 2018. So the reality was that China no longer needs all this surplus. They need some. They might need a bit more here or there, and they're a big player, but China ain't going to pay premium price when the LNG is so abundant. And that's where the market got it completely wrong. All right, so what's next for Europe then? We're in this position where price is at an all-time low. I work for a company now that has about 2 BCM of gas production. My production team hates it. Nobody wants gas at 10 euros to be sold when you're producing gas, conventional. There's not a lot of margin in it. LNG players generally also like this. This is not a great environment. So what does it mean for Europe next? And here is what the problem is for the world. This is a chart that was issued just 3 days ago by the International Energy Agency, our lovely, wonderful IEA. And it showed all this new LNG. Where did it go? And you'll see very quickly, Europe. And they called Europe something which I loved. They called it the sponge. How accurate. It's basically the sponge that has to swap up all that spare LNG that's coming on the market, because the reason is Europe is the only place in the world where you can sell LNG in an open market price, you can dump it into the market, you can flood it, you're always going to get a market price. Nobody else has that kind of depth of market. So any spare LNG, you're going to try to get more price, but if you can't go anywhere, you bring it to Europe. That's the first dilemma we have. We're the only sponge. You have 2 or 3 sponges, I mean, they can all soak up a bit. No, you're the only one. So you've got to soak it up. The second dilemma you have is, what will it continue on? Will it actually be worse this year or not? And my answer is very clear. Will this gas glut continue to the end of 2019 and 2020? The answer is no. It's going to get much worse. It's much worse than you think, in my view. If you think we're over this, think again. Because the reality is, remember we showed the 58 BCM? Well, let's just throw another 27 BCM on top of it. These things have been decided a long time ago. They're coming online. People are still making FID decisions today. They always say, it will be better next year. It will be better. Optimism is always there. So we got more LNG coming online next year. Where's it going to go? There's only one sponge. This is the global gas market, global LNG market. Yeah, China will take some, but Europe is going to have to absorb all that surplus LNG. So then you say to yourself, why don't the LNG guys stop? Nobody's interested in 10 euro gas. Supply and demand has to work. It's a global market, so something is got to give. So I thought about that. Here's the problem with giving. The lovely TTF market here is still trading for next year 16, 17 euros. It's not 10. 16, 17 euros for next year, even though we're selling gas nowadays on the prompt for 9, 10 euros. At 16, 17 euros, that's about $5 per MMBTU for the LNG. It's actually okay. It's not great, but it's okay. And what people don't understand, if you have an LNG portfolio, every smart LNG player nowadays, the traders, even the big producers, hedge. They take that price and they say, you know what, I lock in my 16, 17 euros. So I'm fine. I don't have an issue. Prices can go wherever they want. I've locked in my 16, 17 euros. So LNG players have locked or are already locking or will be locking, most of them hedging their LNG, and there's no reason for them to stop. So the LNG will not curtail. LNG supply is not an elastic supply as we all think. A, because they're already hedged and therefore they might as well produce it and ship it. Worst comes to worst, they sell it into Europe for the hedge, or they find another place where they can get a better price. So if that's the case, LNG won't give. What has to give? Somebody has to give. This is not normal. We have an oversupply. Where is the free market? Free market must adjust. Supply must reduce or demand must increase. We just learned LNG supply ain't gonna reduce. LNG supply isn't elastic. These plants are built to run at base loads, liquefaction. They're not gonna dial up and down. They've invested billions on it, and the people who have taken the LNG have hedged it and saying, you know what, don't really give a toots. I'm hedged. I've got my money. Might not be as great as I wanted, but I'm going to take that LNG and hope for better times. So what has to give in Europe? Russia? No way. I worked for the Russians for 5 years. If one thing I've learned, the Russians need the hard-earned cash. Like any country, they rely on the billions of foreign money that's coming from their gas sales. And I've actually seen myself, when gas prices dropped, they increased supply because they're missing €500 million worth of revenue. So perversely, some of these suppliers actually do the opposite. When prices drop, they don't reduce supply, they increase because suddenly their target for revenue is down, and it just pumped more into the market, spiraling it further down. So in my view, Russia is not going to curtail. Norway and North Sea, a bit. I think Norwegians are more sensible. They're saying at 10 euros, let's reduce. So there might be a little bit, but now we know far enough. You'll see the Norwegians turn down flows, interrupt flows. So the Norwegians, but that's not enough. That's not enough. So nobody else is going to reduce it. LNG is not reducing it. And on top of it, this is an article from Bloomberg just a few months ago. What do you do when prices are cheap? You wait for better times. You stock up your pantry. You fill up your storage. Storage in Europe today is as full as it has ever been in the history of gas storage in this continent. Storage on the continent in Europe is overflowing, if I can say so. Storage in Ukraine, where I work, has 5-6 BCM more than it's ever had. Everybody is just brick full with this gas. So you have all these stores sitting there. You've got LNG coming in. You've got the Russians not reducing. Norwegians a bit. It's just gonna get worse. This winter, they're going to have to dump all that gas they stored and paid for onto the market. And if the prices drop, they might say, let's keep it in store. Then we don't have injection season next summer. So no matter the way you look at it, this is just not looking good for the supply and demand imbalance. So what's the outlook for Europe in my view? German economy is plumbing down. Demand is not going to pick it up. Supply is not going to reduce. There's not going to be more demand growth all of a sudden because of 10 euros gas. There isn't much more to give. So we are looking what I call a perfect storm. And actually, it's not my word. This is from our wonderful colleagues. I stole that great article from the Oxford Institute for Energy Studies. They're predicting $2, which is about €6 gas for 2020. Now, they are saying we need a perfect storm. We need the LNG to come. We need some warm winter. We need Russian supplies to continue. Okay, it's a couple of factors. But is it feasible? It sure is. I think there's a higher chance we're going to have a huge storm and we could be looking at $6 to $8 gas in Europe than we do at anything else. Unless something interesting, a black swan event happens. But the conclusion of what I've learned and want to share with you is, if you're a consumer and a buyer, rejoice. Spot gas is cheap. It's lovely. 8 to 10 euros within the day ahead. If you're a producer and seller, hedge, hedge, hedge. Because the market is still broken. And you can still hedge at a good price and not worry about the pricing. That's what everybody's doing. So it's kind of a win-win. Producers are hedging, LNG guys are hedging, consumers are happy. So that's my conclusion. Thank you for your time, and I appreciate it.